0345 6060 973.
12:34 is the time. Real life tales of mortgages continue, and but before that, actually, let's talk to Stuart, because Stuart's a mortgage broker, so that could be quite interesting, finding out what's going on from inside the office of somebody who is presumably both extremely busy and not enjoying his work as much as usual. Stuart.
Yeah, let's just say it's been a crazy couple of weeks, really, to be honest.
Yeah,
definitely.
So, go on. Tell it however you want.
Oh, well, I mean, the thing is with this, a lot of the time, the problem in the sort of viewpoint the government have been putting forward on this, and certainly in interviews this week, has been a case of it's to do with the Bank of England. And that is the biggest misconception about what's been going on. Because in terms of before the speech, when it happened, in the lead up to that, the day before was when base rate was increased by 0.5% by the Bank of England. Okay. But in the week before that, the lenders had already started to price in that change. And they thought, in many cases, it was going to go up higher, maybe by 0.75.
Yes.
So in the week before the speech, the rates had already started to increase by lenders. After the speech, and when the money months, was when the chaos started. And from that point onwards, we're in a position now where a lot of the rates that the public are being offered are in the region of 1.5 to 2% higher than they were before his speech.
But because the speech was so catastrophic that there is an expectation that the bank will have to raise rates still further in order to undo the damage that the mini budget has done, and that's what the banks are factoring in. That's what the mortgage providers are factoring into their calculations and their projections.
What we've so far this year, though, there has been a trend upwards, as you know, with base rate during the course of the year. So at the start of the year, we could get a 5-year fixed rate for a client at 1.75.
Yeah, I know.
This week, similar client with a large deposit of 40%, 5.14. So that rise is inclusive of this additional boost that was given to it by the Chancellor. Yeah. The rate trend itself has been increasing, but it's been a bit of a more of a manageable one.
It's been incremental. It's been incremental. Yeah. It hasn't been. This is bombshell stuff, isn't it? I mean, and that pushes. Oh, we've spoken to a couple already. I'm sure you were listening, but this is the difference between being able to press ahead with a move and not being able to press ahead with a move. It's that simple, isn't it?
Yeah, I mean, I spoke to a client this morning who was looking to buy a flat to let out, for example, and I know people have got different views on people who do that, but this is going to be part of a bigger issue that follows on, because their first inquiry with us was about a month ago, and they could get a 2-year fixed rate at 3.75. Today, if they were going ahead, which they're now not going ahead, be 6.23. Now, the impact, not only just for these transactions, so there's one seller who's not going to get a buyer off of that already. But next year onwards, when we've got situations where you've got buy-to-let landlords who are looking to refinance, a lot of the lenders now have already started to make changes to their stress testing interest rates. So normally, if you were a buy-to-let investor and you wanted to buy a property to let out, the lenders don't just check to make sure that the rental that's coming in per month covers the mortgage. They stress test it at a higher interest rate to make sure it does.
So, in other words, if it goes up, are these people still going to be good for it?
Exactly. So that range was normally in the region of 5.25% or 5.5%. One lender at the end of last week changed their stress testing level to 7.44. So
there's going to be hardly anybody left who can press ahead with deals like this.
Well, the problem is, you see, the knock-on effect is that if you've got a buy-to-let landlord who needs to refinance at the end of a deal...
I've got one on next. I've got one on the other line, would you believe?
They've got higher interest rates, but then on top of that, if they want to achieve refinancing in the future, who's going to pay? It's going to be the tenant, because they're going to pass on that cost.
And they won't be able to afford. They won't be able to afford that either. So what happens then? I mean, this is when you have a crash, is it? I don't want to use apocalyptic language, but how does this play out if things carry on like this? And it looks like they are going to carry on like this, because Kwasi Kwarteng apparently thinks he's played a blinder. Well,
the two main sort of key issues are, both for residential and for buy-to-let, is that existing lenders will always work with borrowers. So even if somebody can't remortgage, whether that's a home to live in or a let property, lenders will tend to have, not in all cases, but most of them will have options for interest rates for people to switch to with minimal underwriting on that basis. Okay, so that is like a fallback option. But one point on the issue that with regards to what the Chancellor said, this is statistics from Money Facts, okay? So over the calendar year until his speech, mortgage products had reduced by 27% due to rate rises during the course of the year.
Yeah.
In the week after his actual speech went out, the available products on mortgages during that week fell by another 41%.
Yeah. It does beg a belief, doesn't it? And a quick word on first-time buyers. You talked a lot about buy-to-let landlords and renewals, but first-time buyers they're just out of the game, aren't they, for the foreseeable?
It depends a lot on whether it's about balancing things out in terms of what their current circumstances are, because there's going to be scenarios there where they may all be in rented accommodation already, so the gap is going to be larger now than it may have been before in terms of the cost for them per month between a mortgage and their rent. So that's going to be down to individual circumstances. The only other thing I wanted to mention, actually, which is with regards the government's line with regards to the Bank of England being all-encompassing of what happens to interest rates. The important thing is the swap rates, because these money market swap rates are what the lenders use to price fixed-rate mortgages.
Yeah.
So the Bank of England base rate doesn't directly affect that in most cases. So that's where these costs have increased from. Because of the actual banks, it's costing them more money now to buy the money in, which is why we've seen rates being withdrawn. I mean, I had one lender contact me last Sunday saying we're pulling our rates now for tomorrow.
Oh.
And, for example, a year ago, we could say to a client, here's the best deal for you, and then they could go away and think about it for a week.
Yeah.
Now we're having to do disclaimers. It's basically saying, look, you need to act quickly, unfortunately, but we cannot guarantee that when you come back, this deal will still be there.
So grab it now with caveat emptor, buyer beware.
Exactly,
all of that.
yeah.
Stuart, mate, thank you. So, I mean, it's pretty bleak, and it is. I mean, just very briefly, how do you process the fact that you've given us a neat explanation of how the government is trying to avoid responsibility rather disingenuously, but I'm just looking at one of the first polls that's dropped since Tory conference finished, and Labour are up to 32 points ahead on this voting intention poll. Conservatives steady on 20%. I don't know that they'll go much lower than 20%, but so it's not landing. I mean, people are just not persuaded. People have lost complete faith in this government, but they continue to insist that they're either blameless or that they're doing everything right. How do you process that personally, not professionally?
On the personal level, all you can try and do, certainly if it's friends talking to me about it, I just try and say to them, try and explain the same sort of things, that what they're saying is not true.
That's such a scary conclusion, isn't it?
Yeah, you have to say to them that what they're saying about the Bank of England being all responsible for everything is not the case. The
reality they describe does not exist.
and the fact that they bang on about fiscal responsibility, it's like this is the biggest own goal they could ever do.
Yes.
And to pretend that they didn't have an input in this is the worst thing of all.
It's compounding the incompetence with calumny.
It just beggars belief, to be honest. And then the thing is with it, the main thing is what people have got to do, above all else, if they've got a mortgage and their mortgage deal is up for review in the next 12 months, start 6 months before their rate is due to end.
Solid
it's very
advice.
important. Give them time. Give themselves time.
Stuart, thank you, mate, and I appreciate that. I really do. A bit of professional insight. That figure just dropped while Stuart was talking. It's voting intention poll covered research done on the 6th of October, which is yesterday. Labour on 52%, the Conservatives on 20%, the Lib Dems on 8%, the Greens on 7%, and the SNP on 5%. That honeymoon period of Liz Truss's is. Yeah. Here is a little snippet, a little soupçon, a taster, if you prefer, of my full disclosure interview with probably the most significant broadcaster of the last 50 years, would you say? Apart from David Attenborough, which is a point David Dimbleby made himself at the beginning of our interview.